Let's try a little math problem. Take the entire market capitalization of Apple, Microsoft, Amazon, and Google and add them all together at their absolute peak. Congratulations! You still have not even reached half the wealth of a single company in human history. $7.9 trillion. That is an incomprehensible number for any modern tech conglomerate today. But the craziest part is that this company did not sell artificial intelligence. They did not manufacture smartphones, and they did not build electric cars. They sold black pepper and nutmeg. And protect their spice sales, they owned a private military equipped to the teeth, ready to blow away anyone who stood in their path. How could a wholesale spice trading company invent the modern stock market while simultaneously operating one of the most ruthless and sophisticated financial systems of the 17th century? The answer lies in something fragile but full of deceit: the very first stock certificates in the world. To understand the sheer madness of this money printing machine, we have to travel back in time to Europe in the early 1600s. Welcome to an era where a handful of black pepper could literally buy an entire farm. Back then, spices were not just something you used to make your food taste a little less bland. They were the ultimate symbol of supreme power, luxury, and social status. Owning a cabinet full of cinnamon, star anise, cloves, and especially nutmeg was the ultimate measure of wealth. It was exactly like parking a multi-million-dollar supercar in your driveway today. The European elite craved spices so badly that they were willing to pay astronomical prices, turning these dry plant seeds into the real black gold of the era. But there was a massive mathematical headache here. The supply of these spices was located tens of thousands of miles away from Europe. They grew in a place known as the Spice Islands, in modern-day Indonesia. And getting them to the dining tables of the European elite was an absolute logistical nightmare. Let us dissect the traditional business model of the capitalists at that time. The old way of making money was actually very simple but utterly terrifying. The ultra-rich elites in the Netherlands, Portugal, or Spain would pool their assets, buy a wooden ship, hire a captain and a crew of desperate sailors, and then send them out into the vast ocean, hoping they would survive and return. The reward for this massive gamble was incredibly sweet. If the ship safely returned to port with its wooden barrels full of spices, the profit margin could reach a staggering 400%. A single successful voyage was enough to feed 3 generations of your family in absolute luxury. However, the probability of that happening was brutally low. The ocean back then was a literal wealth-grinding machine. Imagine placing your entire life savings on a single casino bet where the dealer consists of violent tropical typhoons, scurvy eating away at the crew, and bloodthirsty pirates lurking in every corner. Statistically, a massive percentage of trading ships that set sail never found their way back home. They remained forever at the bottom of the sea along with all the invested capital. You could be a powerful, wealthy merchant in the morning, but all it took was one shipwreck report blowing in from the Cape of Good Hope in the afternoon, and you would officially become a penniless beggar, drowning in debt and despair. That was the harsh reality of the early commercial economy. The risk was simply too high and too heavily concentrated. A single individual or a family, no matter how rich, could not withstand the mathematical shock of losing 2 or 3 ships in a row. The fierce competition from the Portuguese only made things more suffocating. The economy at that time was stuck at a fatal bottleneck. The drive to get rich was infinite, but the capacity to absorb risk had a hard limit. Those Dutch tycoons began to realize that if they kept playing this deadly game of roulette with the ocean, sooner or later they would all go bankrupt. Basic math dictated that a business model based purely on luck and extreme physical danger was unsustainable. There had to be a way to bend the rules of the game. There had to be a clever machine that could separate the massive profits from the deadly risks. The sharpest minds on the docks of Amsterdam sat down together. They looked out at the stormy sea and asked a revolutionary question. Why do we have to bear all this deadly risk ourselves? Why do we not find a way to throw all that risk onto someone else? And out of that sheer desperation, combined with bottomless pit of greed, an unprecedented financial system was born. They did not try to build stronger ships. They did not try to draw safer maps. Instead, They invented a weapon thousands of times sharper, a financial innovation that would forever change the way humanity handles money. A demonic idea wrapped in a perfect illusion of shared prosperity, ready to drag an entire nation into the craziest vortex of greed. In the year 1602, the Dutch East India Company, or the VOC, was officially born. But the real genius was not in their trading routes. It was in their financial loophole. This is where things get completely crazy. Imagine the dangerous spice trade as a massive, high-stakes casino. Previously, a single wealthy merchant had to walk into this casino and slam $1 million onto the roulette table for a single spin. If it lands on red, he gets $4 million. If it lands on black, his ship sinks and he is completely wiped out. That is terrible math. So, the founders of the VOC asked a brilliant question. What if we do not place the bet ourselves? What if we take that $1 million bet and chop it up into 10,000 tiny pieces of paper? We will call them shares. We then sell each piece of paper to the public for $100. Suddenly, the entire game changed. You did not have to be a billionaire to play. The local baker, the shoemaker, the blacksmith, and even the street sweeper could walk up and buy a tiny slice of this massive casino. If the ship sinks, the baker only loses his $100, which hurts, but he will not go bankrupt. But if the ship returns with spices, everyone gets a cut of the massive profits. This was the first ever initial public offering in human history. The concept of the joint stock company was born. On the surface, it looked like a beautiful democratization of wealth, but in reality, it was a mathematical trap. The founders of the VOC had successfully transferred the deadly risk of the ocean to the general public, while retaining total operational control of the ships and the massive potential upside. The crowd happily bought the risk, and the elites kept the power. The result was an escalation of greed on a scale the world had never seen before. Money from regular Dutch citizens poured into the VOC like an endless waterfall. Overnight, the company had access to what essentially felt like infinite capital. When you have a bottomless pit of public money, you stop playing by the normal rules of business. The VOC took this mountain of cash and effectively bribed the Dutch government to grant them powers that no corporation should ever possess. They were no longer just a trading company. They were granted the legal right to mint their own currency, negotiate treaties with foreign nations, build military forts, and most terrifyingly of all, declare war. Let that sink in for a moment. A corporate board of directors, sitting in Amsterdam, had the power to launch a full-scale military invasion. And that is exactly what they did. The VOC quickly realized that negotiating for spice prices was for losers. If you want maximum profit for your shareholders, you do not bargain, you monopolize. Using the massive funds raised from the public, they built an armada of heavily armed warships. They sailed to the Banda Islands in Indonesia, the only place on Earth where nutmeg grew at the time. When the locals refused to grant them absolute exclusivity, the VOC did not try to offer a better deal. They unleashed a brutal military campaign, wiping out or enslaving nearly the entire native population of the islands. They replaced them with imported labor to harvest the nutmeg strictly for the VOC. The stock price in Amsterdam skyrocketed. The dividends flowed. The citizens celebrated their growing wealth, completely disconnected from the bloody math that fueled it. The company had become a state within a state, a corporate monster fed by the savings of ordinary people and driven by absolute monopoly. But the math of running an expanding military empire is very different from the math of selling spices. But math does not care about your military might. Math is cold, unforgiving, and eventually catches up to everyone. Maintaining a global monopoly by force is unbelievably expensive. You have to build more wooden fortresses. You have to hire more mercenaries. You have to launch more warships to fight off the British, the Spanish, and the angry locals. Very quickly, the brutal reality of their business model became obvious. The astronomical cost of running a private military empire began to swallow the massive profits from selling nutmeg and pepper. Their expenses were growing exponentially, while their spice revenue hit a ceiling. This is the exact moment the loophole turned into a death trap. So, what does a giant corporation do when the underlying math starts bleeding red? Do they tell their shareholders the truth? Of course not. They do what every desperate financial institution in history has done. They lied. The elites running the VOC knew that if the dividend payment stopped, the stock price would collapse. And if the stock price collapsed, the public money machine would shut down. To keep the illusion of infinite growth alive, they started doing something entirely insane. They paid out those massive dividends not from actual trading profits, but by borrowing more and more money. Yes, the first publicly traded company in the world had quietly transformed into the greatest legal Ponzi scheme in history. They were taking on massive debt to pay off early investors, keeping the crowd blinded by short-term gains while the foundation rotted away. For decades, they kept juggling this ticking time bomb. But the debt mountain grew too large to hide. Internal corruption spread like a virus, as directors skimmed money off the top to line their own pockets. The final blow came when the Fourth Anglo-Dutch War broke out. British ships decimated the VOC fleet, cutting off their vital trade routes. The Ponzi scheme ran out of fresh cash. The music completely stopped. In the year 1799, the mighty VOC, a company once valued at the modern equivalent of nearly $8 trillion, officially declared bankruptcy. The empire collapsed into dust. So, who actually paid the price for this spectacular crash? It was not the elite directors who designed the system. They had already extracted their fortunes long ago. The true victims were the tens of thousands of ordinary Dutch citizens, the bakers, the shoemakers, the everyday people who had poured their life savings into what they thought was a guaranteed wealth machine. They were left holding nothing but beautifully decorated, utterly worthless pieces of paper. Trillions of dollars of value simply vanished into thin air. This is the ultimate macroeconomic lesson of the VOC. Whenever a financial entity becomes too big to fail and uses the money of the ignorant crowd to fund its reckless, unchecked expansion, the final destination is always a mathematical catastrophe. The loophole of shifting risk to the public is still widely used on Wall Street today. It happened in the housing market in 2008, and it will inevitably happen again. The faces change, the assets change, but the math of human greed remains exactly the same. Do not forget to subscribe to the channel and leave a comment below about what you think of this historical scam. And hit the notification bell, because in our next video, we are going entirely off the deep end to explore how an entire nation went bankrupt over a bunch of tulip flowers.